Imagine waking up to find $1.2 trillion wiped off the US stock market in one day. That's more money than the GDP of most countries, gone in hours. All because China just slammed the door on rare earth exports, the secret sauce powering your iPhone, Tesla, and even America's missiles. But what if I told you this isn't just a market blip? It's the opening shot in a trade war that could cripple global tech forever. Stick around, I'll reveal how to protect your portfolio before it's too late. Welcome back to our channel, where we break down the chaos shaking Wall Street and beyond. And today we're diving into the bombshell that's got investors panicking: China's sudden clampdown on rare earth exports, triggering a savage stock plunge on October 10, 2025. The S&P 500 tanked 2.7%, that's 182 points evaporated, while the Dow shed nearly 900 points in a brutal sell-off. The Nasdaq? Down 3.6%, with tech giants like Apple and Nvidia leading the bloodbath. Why? Because rare earths aren't just rocks, they're the lifeblood of modern industry, and China controls 90% of the supply. When Beijing announced announcement number 61 on October 9th, tightening controls on 5 more rare earth elements, on top of 7 already restricted, it was like pulling the plug on the world's tech engine. But don't hit pause yet. By the end of this video, you'll know exactly who's hurting most, what President Trump is firing back with, and 3 simple moves to shield your investments from the fallout. If you're new here, smash that subscribe button and ring the bell. We drop these breakdowns daily. Let's jump in.
Alright, let's rewind to yesterday. On October 9th, China's Ministry of Commerce dropped announcement 61 like a mic at a rap battle, expanding export restrictions on rare earth metals to include gadolinium, terbium, dysprosium, holmium, and yttrium, plus ramped up scrutiny for anything heading to semiconductors or defense tech. This isn't a full halt yet, but it's the tightest squeeze since April, when Beijing first retaliated against U.S. tariffs by curbing shipments. Why now? Trade tensions are boiling over. President Trump, fresh off his re-election vibes, has been hammering China with tariffs all year, think 60% on EVs and steel. Beijing's response? Weaponize the one resource the U.S. can't easily replace: rare earths. Quick primer for the uninitiated: rare earth elements, there are 17 of them, are weird metals that make magnets super strong, lasers precise, and batteries efficient. Your smartphone needs M for the screen and speaker. Electric cars like Teslas rely on neodymium magnets for motors. F-35 jets, dysprosium keeps M stealthy. China mines 70% of the world's supply and processes 90%, that's monopoly-level dominance. When they tighten the faucet, prices spike overnight. Neodymium futures jumped 15% yesterday alone. Enter October 10th, markets open green, riding high on jobs data. Then Trump tweets, or truths, whatever, calling China's move economic blackmail and vowing massive tariffs starting November 1st, stacking 100% duties on top of existing ones. Cue the panic. Investors fled to safety, dumping everything from chips to autos. Result: a $1.2 trillion evaporation in market value, the S&P's worst day since April's tariff tantrum. But here's the curiosity hook: while the broad market bled, some stocks soared. MP Materials, the top U.S. rare earth miner, popped 12%. Lynas Rare Earths in Australia, up 8%. Coincidence? Or a sign that savvy players saw this coming? We'll unpack that later. Pause for a second. Why should you care if some obscure metals from China get restricted? Because without them, the green revolution grinds to a halt. Take EVs. Rare earth magnets in motors make Teslas zip without guzzling gas. China supplies 95% of those magnets globally. Tesla's stock dipped 4% yesterday. That's $50 billion in shareholder value poof, as analysts warn production lines could seize up by Q1 2026 if supplies don't rebound. Then there's big tech. Apple, their supply chain for iPhone cameras and speakers is 80% China-dependent. NVIDIA's AI chips need rare earths for the lasers in data centers. Yesterday's Nasdaq plunge hit semis hardest, Broadcom down 5%, AMD off 4.2%, as fears mount over chip shortages echoing the 2021 crisis, but worse. CCA 51C and defense, this is where it gets scary. The Pentagon's been screaming about rare earth vulnerabilities since 2010. F-35s, drones, missiles, all rely on these elements for guidance systems. CSIS warns that China's restrictions could delay U.S. weapon production by months, handing Beijing a strategic edge in any Taiwan showdown. Zoom out, renewables, wind turbines. Rare earths in the generators, solar panels, processing tech. The IRA's $369 billion green push, suddenly at risk, with U.S. firms scrambling for alternatives that don't exist at scale. Economists at Reuters peg the ripple effect. If this escalates, global GDP could shave 0.5%. That's $500 billion in lost growth by 2027. Shocking, right? But the real mind-bender, China didn't halt exports entirely, they just added red tape. So why the apocalypse pricing? Because markets hate uncertainty, and this smells like escalation. Question for you. Is this payback for Trump's tariffs or the start of something bigger? Drop your thoughts in the comments. Now, the cold hard numbers on America's wallet. That $1.2 trillion market cap wipeout. 883 for DF. It's not abstract, it's for 101Ks shrinking, pensions hurting, and companies slashing forecasts. Tech sector led the rout. The Magnificent Seven lost $400 billion combined. EVS. Ford and GM down 3 to 4% as rare earth hikes could add $1,000 per vehicle cost. Broader economy, supply chains are fracturing. Yahoo Finance reports chip makers like TSMC are bracing for fallout, with delays pushing back holiday gadgets and auto launches. Jobs. Rare earth-dependent factories in the Midwest could idle, echoing Rust Belt pains and inflation. Watch for it. Higher input costs mean pricier everything from fridges to fighter jets, but silver lining, not all doom. U.S. rare earth plays like MP Materials aren't just surviving, they're thriving, up double digits as investors bet on reshoring. Australia's Linus. Same story, Barron's calls it a rare earth rally amid the rubble. Still, for the average Joe, this plunge stings. If you're heavy in tech ETFs, congrats, you're down 5% overnight. The big question burning up forums: will Trump's 100% tariff bomb defuse this? Or light the fuse on a full trade war? Enter the Donald. Hours after China's announcement, Trump didn't mince words. China's holding the world captive with their rare earth monopoly, he blasted, promising 100% tariffs on Chinese imports starting November 1st, a layering on existing duties for a potential 160% wall. D9OFO for supply chain dive says it'll hit everything from batteries to bulldozers. Bold, absolutely, reckless. Critics at Al Jazeera call it escalation roulette, risking a 2018-style slowdown. Looking ahead, short-term, expect volatility. S&P could test 5,000 support if talks stall. Long-term, this forces diversification. The U.S. has mines like Mountain Pass ramping up, but it'll take 3 to 5 years to dent China's grip. Europe's scrambling too, with EU probes into dependencies. Optimists point to recycling tech and Aussie alliances as lifelines. Pessimists. A bifurcated world, one supply chain for the West, another for the East. Either way, your next EV or gadget just got 10 to 20% pricier. So, how do you navigate this mess? Tip 1. Diversify beyond big tech. Rotate into rare earth miners like MP Materials MP or ETFs like REMX. They surged yesterday for a reason. Tip 2. Hedge with gold or bonds, safe havens when trade wars flare. Tip 3. Eye the bargains. If Tesla dips below $220, it could be a buy on the rebound, but only if you stomach the risk. Remember, markets overreact. This $1.2 trillion hit might look like a buying opportunity in 6 months. But act fast, follow the news, because Beijing's next move could swing it all. There you have it, China's rare earth squeeze, the $1.2 trillion wake-up call, and your playbook to fight back. What do you think? Trade War 2.0 or temporary tantrum? Comment below, like if this saved your portfolio, and subscribe for more No-BS market intel. Hit the bell. Next up, how AI stocks survive the chip crunch. Thanks for watching. Stay savvy out there.